Okay, let's start this analysis. So, price fell yesterday and it fell into a 4-hour bullish FEG. That was a 4-hour bullish FEG that was untapped for a while. And then as you can see, it also tapped into a hourly bullish FEG, right? And then from there, price left behind a failure swing, and the position in where that failure swing reacted out of is a bearish 4-hour FEG. So obviously when price retraces, it retraces for two reasons, right? Either it swept opposing liquidity or it traded into an opposing FEG that allowed it to retrace, or it's retracing because it's going towards an untapped FEG or opposing liquidity, right? So as you can see, price traded into a 4-hour bullish and 1-hour bullish FEG that was untapped for quite some time, and then price traded higher for a while, retracing obviously because price is in a downtrend. So then price was retracing, and then as you can see, it traded into a 1-hour FEG, which is also a 4-hour FEG actually. So if you look at the responsibility of the bullish FEG, the 1-hour and the 4-hour, right? Its responsibility is to displace above the high that created it, right? So in this case, the high that created the FEG is the swing high. So it's all the way up there. You want to see it trade into the FEG and then take that external swing, right? But at the moment you can see obviously when price traded into the bullish FEG, it didn't take the external swing, right? It tapped into the FEG, it traded higher, and then it left behind that failure swing. The reason why price stopped there is because price traded into a bearish 1-hour and bearish 4-hour FEG, right? So let's put that there, 1/4-hour FEG. And now we have two conflicting biases, right? So if you look at the perspective of if you want to long, right? You want to see price put in that failure swing, and then from there you want to see price basically retrace to OTE like that, and you don't want to see this internal 1-hour bullish FEG get taken, right? Let's just say higher time frame internal swing. You want to see bullish PD arrays in this section get respected in order to determine whether or not this failure swing will be taken. Right, let's just say plus high time frame internal swing, because we know that the job of this is to increase, right, to go higher, so plus. And then this one here, let's say minus. So we know that the job of that one is to, from the sell side, right, from the bearish point of view, is to continue trend, right? So I know now that from the bullish side of things, if I'm looking to long, I want that failure swing. After the failure swing, I want to see, essentially what I want to see is price retrace, right? And I want to see it return into discount before putting in a continuation swing here, right? So I would want to see something like this. I want to see a continuation swing there before price then goes ahead and trades higher, right? That's what I want to see on the bullish side of things. So I want to see a tap into the high time frame swing, failure swing, continuation swing in discount, and then skyrocket. If you're looking from the bearish perspective, if you're looking to sell, right, this failure swing is also a good thing, because not only are we putting in a continuation swing from the bearish side of things, we are also putting in a failure swing on the bullish side of things, right? So if I want this failure swing to hold, I want to see the exact same thing occur, but on the opposite side. So I want to see pricing return into premium. So I want to see price trade above there, and then after the price trades above there, I want to see it respect and then move down, taking that internal swing basically. So I do not have, let's go to the 15-minute to see what we have there. So I do not have that much of a complete direction yet, because obviously it looks like the bearish, from the bearish side of things, it looks like price is just selling off, right? And then obviously we tap into a 4-hour bullish FEG, and then from there price puts in a bearish continuation swing by tapping into a bearish 4-hour FEG. So at the moment price is conflicted. So what you want to see, or what you want to do, let me rather say, is you want to be patient. You want to see price trade into discount or premium, so that you can observe, right? So that you can observe which PD arrays are being respected. What are we getting right now? We can see price traded into a 15-minute bullish FEG, right? And we can see, if you look at the 50% level of that, you can see that at the moment it is actually getting respected, right? Not by a lot, but it is getting respected. So if you want to confirm that higher time frame tap that was in the bullish 1-hour or 4-hour FEG, if you want to anticipate that to be a long-term swing point, right, you want to see that expansion and then that retracement to the downside, right, respect bullish PD arrays, and then you want to see it expand again, right? That's what you want to see. So let's work off of that, right? Let's do that, because I don't see any other bullish higher time frame PD arrays that could be in the way of premium and discount. Essentially premium and discount is actually within the same leg now, so I think that's a good thing. When you want to look for reversals, you can see that it's in the same leg, right? Okay, so already looking at it, let's first mark out the 4-hour candle open, right? So there's our 4-hour candle open. Let's mark it out like that. Let's just say 7 a.m. 4-hour candle. We'll do that. Here we go. Make the font a bit smaller. There we go. Cool. We'll do that. Okay. So I have the idea of what I want to see so far. That's good. That's good. So now, what do I see now? Alright, price is in discount, right? I have an anticipated long-term swing on the left. Price returned to discount level of that swing, and what did it do? Price traded into a bullish 15-minute FEG, right? And then once it traded into that bullish 15-minute FEG, I can then also see that price swept lows, right? Price swept lows and it gave me this 15-minute change in state of delivery right there. It also gave me that after a very nice liquidity sweep of the lows. Okay, I also have a 5-minute change in state. Also have a 5-minute change in state of delivery. Let me go on to the 5-minute. There we go. So I also have a 5-minute change in state of delivery, right? And let's see what else do I have here. I have a 5-minute FEG resting there. So if I want to see price be bullish, I don't want to see this level get broken basically. If price is gonna be bullish, I want to see this swing point hold, right? If price is bullish, I want to see that swing point hold. So what do I have? Do I have any 15-minute bullish FEGs? No, I don't. The only PDA arrays I have here, I have a 15-minute change in state in which price is trading into now. I have a 5-minute change in state, and then I have that 5-minute bullish FEG. So if price displaces through all of that, right? If it displaces through all of that, and then I can anticipate that price retraces again eventually, and it does that, right? Then I expect it to just do that. And then because price did that and it disrespected the bullish PD arrays, I can then confirm that the swing high that was created out of that bearish 4-hour FEG, that was the continuation swing on a higher time frame and a failure swing on the higher time frame from the bullish side of things when price traded into the bullish 4-hour FEG, right? That left behind that failure swing, and then from there price continued lower. So let's just read price and let's see what happens. And let's also not forget, even better, good example right here. Let's go to GU. Okay, GU. GU, we have mismatched price action right now basically. So price has already traded into this bullish 5-minute FEG on GU, and it didn't on EU. So let's see if that's the correct time. So that low was made at 6 o'clock, and then the low at EU was also made at 6 o'clock. Cool. Let's check this swing 510. Where's the swing at 510 here? 510. Okay, so as you can see, price traded into that bullish FEG, right? So if I want to long, this is the premise on how I can use S&T as a confluence if I want to long, right? So if I want to long, I basically want to see, because obviously you can see that that GU is basically the weaker pair right now, right? If I want to long, I already have my reasons for shorting, right? So my reasons for shorting, my reasons for buying. So my reason for buying is that if price wants to trade into discount of the range, I want to see price trade into that 15-minute CISD and 5-minute bullish CISD, which it did, and then obviously continue higher. And then my last line of defense would be that 5-minute bullish FEG on GU, right? However, if price fails to do that, what other line of defense do I have? Well, on GU, I have the fact that price traded into the bullish FEG. So now the last thing that I can basically depend on for longs is I want to see a sweep of that low and then a reversal. And then on EU, it will obviously, it won't be a sweep on EU. On EU it will be a higher low, because we already had our sweep there underneath, right, where I marked out that anticipated long-term low. So on GU I anticipate that sweep, and on EU I anticipate a lower high. So then I want to see that lower high basically hold as a strong point, and if it doesn't, and then it obviously means that we can totally rule out that we're bullish then. So how could I potentially enter into a long trade once that higher low is created and I have that SMT with the sell side sweep on GU? Well, I can see here that I have a 5-minute bearish FEG, and if price is going to continue lower, and then obviously it's going to trade into that bearish FEG and it's going to use it as a resistance to go lower. If price fails to do that, and then I can basically get on side. Price might not be bullish though, despite it being in discount and having all of these confluences and all of that, because obviously I don't want to predict what price is going to do. I don't want to predict it. I want to basically react to what price is going to do and react to what price is doing already, right? So just because my bias is bullish at the moment, that doesn't mean that price is going to completely displace through here and then all of a sudden I need to look for new reasons to long, If you can see that price is clearly bearish, and look for reasons to get on side, Don't just like start spamming sell when price ran through the point where you wanted to buy, for a good risk to reward. Like, just find a new opportunity, a new place in which you can get on side with price. Okay, so as you can see on EU, we are trading into that 15-minute and 5-minute change in state level, and we did not reach that bullish 5-minute FEG. However, we did on GU, and it did sweep. And what did I say? I anticipate that on EU I want that sweep to then transfer over to the correlated pair. So on EU I want that sweep that was created on GU to be a lower high on EU. So I wanted to essentially to have that SMT. So I'll mark it out now, but I'm gonna hide it because I didn't get that SMT yet. I'm gonna hide it because I don't want to give myself expectations, So also another thing is, once this bearish FEG gets displaced, and I have a bearish FEG that gets displaced on GU as well, I would definitely say that that's a good time to get on side. So I would look for both a setup on EU and GU, but since I'm longing, I would trade the stronger pair, or the pair that made the failure swing, or in this case the pair that makes the lower high. That's what I would look for. And also not to mention, it's the first time that price has retraced after it made its 15-minute change in state, right? And what does 4-hour candles do often? They can either reverse or they can continue by rebalancing inefficiencies, right? So you can see the 4-hour 7 a.m. candle opened on top, and then it basically traded lower, quite possibly to create a swing point at this 15-minute change in state of delivery area, right? Because it didn't have a swing point yet. There was no continuation swing whatsoever yet. So price didn't retrace yet. On the 50, let me show you. Look, on the 15-minute we got the 15-minute change in state, right? We got a 5-minute change in state. Did price retrace here to put in a continuation swing? No, it didn't. At the moment, price is putting in that continuation swing at the point where I would want to see a continuation swing get put in, right? At a 15-minute or 5-minute change in state level, or at a FEG, right, to continue going higher. But there is no FEG, right, to put in that continuation swing. But on GU, there is a FEG there. Yeah, price traded into it and it gave me an IFG, but what is price doing now? It's reversing because it swept sell side liquidity. It's the weaker pair at the moment. It's lagging behind. So it swept liquidity, and EU is in front of GU because EU is reversing first. It's putting in a failure swing. It's putting in a higher low. So that is essentially the one that I would want to trade. So it's putting in the first continuation swing after the retracement. So I can definitely anticipate that the swing low that was created in the bullish 4-hour FEG, I can anticipate that to hold. But obviously I would want to see how this reacts now, because we got our 5-minute change in state, we got our 15-minute change in state, and I tell you another thing. Look on the hourly, right? Look what's price doing on the hourly. So a new hourly candle is gonna form right now. It's gonna form right now. And where is the wick of the candle that just closed? That black candle that just closed. Where is the wick? The wick is respecting the EQ of that bullish candle. Can you see that? The wick is respecting the EQ of that bullish candle. And the wick is exactly where that 5-minute change in state and the 15-minute change in state is located. So there's a lot of confluences for you to long here. There's a lot of confluences. But obviously, even if all these confluences are met, it doesn't necessarily mean that price is going to just skyrocket, right? So what you want to see is, well, for one, the way I trade, I want to see a reaction out of an area in which price is supposed to continue a trend in order to catch that reversal. What's an area in which you're supposed to see a continuation in bearish order flow? As the bearish 5-minute FEG that we're trading into right now. I want to see a continuation swing get put in there, right? Because it's a bearish FEG. You want to see it get trade into, put in a continuation swing, trade it lower. Is price putting in a continuation swing now? Bearish from a sell perspective? No, it's not. But it is reacting off of it, and that's what I want to see. I do want to see that reaction out of it. And then even on GU, to further extend my analysis, you could say, I want to see price potentially give me that reaction out of the 5-minute FEG from GU as well, and it's doing that. So once it gives me that reaction, and I get the 5-minute inverse, I can then anticipate that this low is in the continuation swing, and I can put my stop loss there. As far as targets go, I'm not too sure. Let's look at our options. Let's look at our options. Okay, so that is Asia low, sorry. If we're gonna be bullish from here, I'm not even gonna sugarcoat it. If we're gonna be bullish from here, we are most likely going to disrespect that 4-hour bearish FEG failure swing. It was a failure swing from a buy side perspective, right? So I can definitely target that. Obviously, I'm not gonna, like, naturally you're going to leave runners on. Like, naturally. But I can target that. Okay, so now I can confirm that I have a higher low. I can confirm that I have SMT of these lows. Am I gonna take the trade yet? Let's see if I can get a better entry. GU is reacting off of the first 5-minute bearish FEG that's in its way. We already reacted out of it, right? EU already reacted out of it, and it gave me the bearish IFEG, so that's good. But if I want to further solidify the fact that I can look for longs here, if I want to further support that fact, what can I do? I can wait for the 5-minute bearish FEG to get inversed on GU. But to be honest, completely honest with you, I get onside now. That's what I do. I'll get onside now. So take a trade there. 5-point stop loss. Because if price goes below this SMT low, and then obviously the bias is invalidated, why would I risk more? Right, targets. I do for targets? I can look for, I can take that, reason being that I can make this my first target. There's a 15-minute bearish FEG there, right? So this would be target 1, and then target 2 I'm gonna be honest, target 2 can be the swing that created that bearish 15-minute FEG. Okay, so as you can see at the moment, price is still going higher. So this most likely means that we are on side. So not only did we use that SMT as our last confluence to take the long, you know, we got that IFEG, that 5-minute bearish FEG supposed to resist price lower, and we inversed it, right? And how did I say, if I want to get a confirmed trade that we can look for longs, or a trade that it will be more solidified to look for longs, we can see that on GU we had that SMT of the lows, and then we had a 5-minute bearish FEG and a 15-minute bearish FEG in its way in order to continue price higher. But you can see that price inversed that as well, and now it's inversing another 5-minute bearish FEG. And if it's inversing it on GU, considering that it's the lagging asset, it's obviously going to inverse it on EU. Look at how price is already going up on EU. Okay, so I'm just doing a voiceover, but basically, so TP1 hit, and then where I took my take profit level for the first TP, the first target, it was at opposing liquidity, right, which in this case was the 15-minute bearish FEG. So after I traded into the 15-minute bearish FEG, it almost hit target 2, but then it actually reversed, and then it took me out at break even. So after this, price swept previous day's low, and then it skyrocketed again after that, so making the higher time frame model a possible buy model B setup, because the bearish FEG, the bearish 4-hour FEG traded into it, it swept the external swing low, which was previous day's low, so it only swept it, failed to displace it, and now it's continuing higher during the day. So could possibly very much likely be a higher time frame 4-hour buy model B setup, because I've seen that this week, I've seen it last week. So yeah, you can see it did displace the 15-minute bearish FEG, but on GU it basically tapped it to a T. It respected it perfectly, respected the EQ of the 15-minute FEG perfectly, and then after that it basically reversed. But yeah, all in all, this was a really good trade. I went through my analysis, I went through my confluences, I went through what I wanted to see in order for the trade to be correct and all of that. So yeah, it was a good trade.